Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to quickly go over the latest earnings report of 3 Canadian stocks in my portfolio, including Killam Apartment REIT and Granite Industrial REIT, which are 2 real estate investment trusts or REITs, and also Brookfield Asset Management that I personally own in my TFSA. I analyze their stocks in detail in 3 separate videos on the channel, and I will leave the link to those videos in the description box below. Currently, I own 223 shares of Killam, 52 shares of Granite, and 100 shares of Brookfield in my TFSA. These 3 companies reported their earnings in the last 2 days, and I think overall they are all positive reports with good growth numbers in terms of their funds from operation or FFO, their mortgage renewal rates, their collected rents, and their future plans for expansion for Killam and Granite, and also good numbers for Brookfield. All 3 companies are pretty much flat after they reported their earnings, which means the numbers were pretty much in line with the market expectations. Let's start with the Killam REIT's earnings report and first go over their opening statement on this earnings report. Killam delivered strong and resilient operating results in second quarter, noted basically the CEO of the company. Revenue growth remained robust, up 5.2% for our same property portfolio, generated by 140 basis points increase in occupancy and 3.3% increase in rental rates. Although inflationary headwinds persist, overall same property operating expenses increased by 2.8% in the second quarter. We are pleased to report same property net operating income or NOI growth of 6.6% in Q2 and 4.8% for the first half of the year. Then the CEO continues with their plans for expansion in 2022 and 2023. The K, our 128 unit development in Mississauga, basically reached substantial completion during the quarter and is fully leased today. This development, along with 2 other completed this year, are exceptional additions to Killam's portfolio and are expected to contribute positively to earning growth in 2022 and 2023. In addition, Killam continues to make progress on our development projects underway, including the Carrick, which broke ground around Q2 and is expected to take 32 months to complete. Their earnings report highlights are basically summarize what the CEO of the company mentioned in the opening statement of this report, which is mostly positive growth numbers. But the part which is most important one is about funds from operation, which is the most important number for a real estate investment trust. Increased adjusted funds from operation or AFFO per unit diluted basically by 4.3% to $0.24 from $0.23 in Q2 2021. Basically year over year, they see a 4.3% increase in the adjusted funds from operation, which is great. And they reduced the first quarter, basically FFO payout ratio by 3 basis points to 72% from 75% in Q2 2021. So this is great. This is great news. It means Killam was able to grow their diluted funds from operation or FFO and also reduce its payout ratio. I expect to see another dividend or distribution increase in the next few quarters based on these numbers. The last important point was about raising interest rate environment and their mortgage renewal rates. During Q2 2022, Killam refinanced 68 million of maturing mortgages with 91 million of new debt, the majority of which were for 10 years terms at a weighted average interest rate of 3.48%, which is 89 basis points higher than the maturing debt. So, which is still a good rate. Overall, I'm happy with Killam earnings report, and I think they will continue to slowly grow their portfolio and their funds from operation in the next few quarters. Next, we will review Granite REIT earnings report. Again, the most important figure here is diluted or adjusted funds from operation or FFO, which increased very nicely from 96 cents per share to $1.04, and their adjusted FFO payout ratio, which decreased from 79% to 75%. This is great. It means they can use 25% of their FFO to continue to grow their portfolio, reinvest in themselves, and basically grow their FFO in the next quarters and the dividend of the company. So I think dividend of the company is pretty safe at the moment because their payout ratio is only 75%. We also see pretty significant growth in revenue and net operating income, which are all positive. They add a little bit depth to the balance sheet this quarter, but they also have more assets now. They also want to sell a part of the portfolio to generate more cash to reduce this debt. Another thing that I really like to see with Granite's statements, the balance sheet, is that they continuously reduce the Magna contribution to the revenue. So this quarter, it was only 28% of the annual revenue of the Granite, which is great as the management team tries to diversify their revenue streams. The management team of Granite has the following priorities for the rest of the year: driving net asset value, FFO, adjusted FFO per unit growth, while maintaining conservative capital ratios, executing on development and expansion projects in US and GTA, disposing of select non-core assets, and continuing to drive organic growth through leasing execution and asset management. Overall, I'm really happy with Granite REIT earnings report as well, as they were able to continue to grow their FFO and net asset value in a conservative manner. The last company that I will cover their earnings report is Brookfield. So the headline of the earnings report reads as follows: Brookfield announced record inflows of $56 billion since last quarter and strong second quarter results. Investable cash and capital increases to over $110 billion, $21 billion of assets sold since last quarter, realizing $5 billion of gains. Nick Goodman, basically the CFO of the company, CFO of Brookfield, stated, "We delivered strong results in the second quarter, supported by a resilient global portfolio of inflation-protected real assets and record levels of fundraising. We have a record of $111 billion of cash and capital available for investment after generating $1.5 billion of net income and $1.2 billion of cash flow." These are amazing numbers. We had asset sales of $21 billion and deployed $20 billion into new investments. This is totally normal for Brookfield to sell assets when they are overvalued or when they don't see much potential in the business or assets, and buy other assets and businesses when they are undervalued or they see potential to increase their efficiency and cash flow. Okay, they continue with this. "The scale, stability, and diversity of our business continues to differentiate our franchise with our investors and clients." He continued, "We remain on track to complete the distribution to shareholders and listing of a 25% interest in our asset management business by the year end." So if you're not aware, Brookfield is going to basically spin off its asset management business as a separate company by the end of the year, and the current shareholders will hold Brookfield shares after this spin-off and also receive some shares of the asset management company on the top. Brookfield is a very complex business as they have various businesses inside their umbrella, ranging from real estate businesses to asset management, power facility operations to software operations. As such, in some quarters, you will see explosion of net income and FFO as a result of acquisitions, and in some quarters, you will see huge drops as a result of selling assets and businesses or accounting practices like depreciation of assets. With Brookfield, I usually care more about their distributable earnings, which is up this quarter by a large margin of 25%. Again, I'm really pleased with Brookfield earnings report and look forward to see how the spin-off of asset management business will affect the profitability and cash flow of the company. There you are, guys. I hope you enjoyed the video. If you enjoyed the video and my coverage of earnings report of Canadian companies, consider subscribing to the channel to see similar videos. I will wait for my other Canadian companies' earnings report to hopefully cover those as well. But until that time, I see you guys in the next video. Farewell.